Have you ever stopped and really thought about the absolute absurdity of modern money? Seriously, pull a dollar bill out of your wallet and look at it. How did a literal piece of paper, backed by absolutely nothing but a collective hallucination we call trust, become the ultimate global weapon? Welcome to This Explainer. Today, we are completely unraveling a global financial thriller. We're opening up the floorboards and looking at the hidden plumbing of the world economy, and let me tell you, it is a fascinating, incredibly high-stakes game.
So let's dive right into it. Empire of Paper, the weaponization of the US dollar.
Section 1. The ultimate global weapon.
Now, you have to put on your skeptic's hat and ask yourself a really fundamental question right out of the gate. Why on earth does the world willingly trade physical, sweat-producing assets for paper? We are exploring a system where the US dollar isn't just some currency you use to buy a cup of coffee on your way to work. It actually functions as the foundational operating system for the entire planet. And like any operating system, the one who writes the code holds all the power. Think about the stark contrast here. On one side, we have physical reality. You have entire countries pulling massive amounts of oil out of the ground, mining gold, manufacturing complex electronics, growing actual food, real, tangible goods. But on the other side, we have the paper reality, fiat currency, systemic debt, and trust. Our sources point out a truly mind-blowing dynamic here. The United States essentially leverages this abstract trust to extract real, hard resources from the global economy in exchange for paper that it can print at will. It's an incredible, unprecedented power dynamic in human history. But how exactly did we get to this point?
Which brings us to Section 2, the Nixon shock, and the end of the gold standard.
To truly understand the current system, we actually have to rewind the clock back to 1944. At the Bretton Woods Conference, the modern global financial framework was built right out of the ashes of the Second World War. The deal was simple. All national currencies were tied to the US dollar, and the dollar itself was explicitly tied to physical gold at exactly $35 an ounce. Because the US held the vast majority of the world's gold at the time, this made logical sense, right? It created a solid bedrock of stability. But leap forward to the 1960s, and the US was suddenly bleeding gold. Deficits were soaring through the roof due to massive domestic programs and heavy foreign spending. Nations like France and Britain saw the writing on the wall, recognized the discrepancy, and started aggressively demanding actual gold for their paper dollars. The harsh truth became apparent. The US simply didn't have enough physical gold in its vaults to cover all the paper it had printed. So what happened? In 1971, President Nixon took drastic action and unilaterally closed the gold window. He severed the dollar's tie to gold entirely. Overnight, the whole world transitioned instantly into a brand new era of pure fiat currency.
The fallout of that single decision is absolutely staggering, according to the historical data. Since that 1971 shift to fiat, the US dollar has lost over 85% of its purchasing power. Over 85%! It became a currency backed by nothing more than government decree. There's literally nothing physical anchoring it anymore. It is entirely a system built on collective belief. But if it wasn't backed by gold anymore, and its value is plummeting, why didn't the system just collapse right then and there? Why didn't the world just walk away from the table?
Section 3. The petrodollar system and pricing oil in dollars.
Here is where the story turns into a brilliant geopolitical thriller. In 1974, the US struck a secret deal with Saudi Arabia to save its currency from the brink. Step 1 of the deal, Saudi Arabia and eventually the entire OPEC cartel agreed to sell their oil exclusively in US dollars, no other currency accepted. Step 2, because absolutely every country on Earth needs oil to survive, to power their grids and run their militaries, every country is now essentially forced to hold US dollars in reserve just to buy that oil. Step 3, what do these massive oil-producing nations do with all these excess dollars flooding their coffers? They invest them right back into US Treasury bonds. Let that sink in for a second. This mechanism literally forces the entire world to finance US debt just to keep their lights on. It was a masterstroke of financial engineering that effectively replaced the broken gold standard with a brand new oil standard.
And the sheer scale of this system today is massive. Just look at this breakdown. Notice how roughly 60% of all US dollars actually circulate outside the United States. They are sitting right now in the central bank vaults of Germany, Japan, Brazil, and countless others. When foreign nations hold these dollars as reserves, they are practically granting the United States a massive interest-free loan. It allows the US to run immense deficits, spending far, far beyond its means without facing the immediate economic collapse or hyperinflation that literally any other nation would experience. It is a stunningly effective global monopoly, giving Washington an exorbitant amount of economic leeway.
Section 4. The Federal Reserve Machine and Fractional Reserves.
But look, every monopoly needs a powerful engine, and that brings us to the internal mechanism driving this entire empire. Legendary investor Ray Dalio perfectly captures how this operates. He notes, inevitably, the central bank prints new money out of thin air and uses it to buy financial assets. Think of the Federal Reserve like the banker in a high-stakes game of Monopoly. When the system inevitably runs out of cash, the banker can never go bankrupt, right? They have the supreme authority to just write numbers on a piece of paper, inject it into the board, and keep the game going.
And the reality of this fractional reserve banking system is mind-blowing when you look at the numbers. Total U.S. credit is hovering around $50 trillion, but the actual physical money base in the system is only about $3 trillion. That means most of what we think of as money floating around in bank accounts, mutual funds, and corporate treasuries is actually just credit. It's promises to pay built on top of other promises to pay. It's an incredibly powerful system because this massive leverage drives explosive economic growth, funding everything from real estate to cutting-edge technological innovation. But, and this is a huge but, it is also highly fragile. It relies entirely 100% on the continuous faith that the system will hold together.
Because when that faith inevitably wavers, we get what's called a liquidity shock. That's a sudden, terrifying evaporation of cash or credit in the financial markets. When the system seizes up and panic sets in, the Fed is forced to aggressively intervene. They inject trillions of dollars into the market to keep the gears turning. But here is the critical catch for the rest of the world. Because the dollar is the global reserve currency, when the US prints money to save its own markets, it essentially exports its inflation globally. The newly printed dollars flood the global market, devaluing the currency held in reserves by other nations. That means the rest of the world effectively pays a hidden tax for America's domestic financial bailouts. It is an absolutely incredible global wealth transfer.
Section 5. The BRICS Rebellion and Bypassing the Dollar.
Now, you better believe the rest of the world is noticing this dynamic, and we are now seeing an aggressive, highly coordinated new push to break free from the dollar's monopoly. The sources pinpoint a very specific, modern catalyst for this global rebellion. In 2022, the US and its allies froze over $200 billion in Russian sovereign assets and cut them completely off from the SWIFT international payment system. Now, regardless of the politics behind that conflict, the financial consequence of this move was seismic. By actively weaponizing the dollar system against an adversary, the U.S. inadvertently sent a massive, glaring signal to every neutral nation on Earth. The message? Your foreign reserves are simply not safe if you cross Washington.
And the immediate reaction was a massive pivot straight back to physical assets. Look at this chart. In 2021, central bank gold purchases were at normal historical levels. But in 2022, following those sanctions, central banks around the world panicked and hoarded a record 1,036 tons of gold. And that relentless pace has barely slowed down since. Countries are actively looking to replace paper trust, which, as they just learned, can be frozen with a simple keystroke, with physical reality that sits safely within their own borders.
Crucially, though, they aren't just buying gold, they are quietly, methodically building alternative financial plumbing to bypass the US dollar entirely. We are seeing major economies setting up direct bilateral trade agreements. China and Brazil are now trading in the yuan and real. India and the UAE are settling transactions using the rupee and dirham. Russia and Iran are utilizing gold and local currencies to move goods. They are purposefully trying to create an archipelago of independent financial islands, completely insulated from the blast radius of U.S. financial sanctions. And this movement is becoming highly organized. Look at the recent aggressive expansion of the BRICS economic bloc. The inclusion of major global oil producers like Saudi Arabia, the UAE, and Iran directly threatens the very foundation of the petrodollar system we discussed earlier. If oil stops being priced exclusively in US dollars, the core mechanism that forces the rest of the world to constantly hold and buy US debt begins to fundamentally crack. For the first time in decades, the operating system is facing a real coordinated competitor.
Section 6. The Verdict and the Future of the System. So, where exactly does this leave us? We really have to weigh these imminent threats against the dollar's deeply entrenched power. Back in the 1960s, the French Minister of Finance famously called the US dollar status an exorbitant privilege. And let's be absolutely clear here, the US still holds this historical privilege today. But the structural pressures are looming incredibly large right now. Morgan Stanley research highlighted in our sources projects potential deep dollar depreciation by mid-2026. This is driven by an unsustainable, escalating trajectory of US budget deficits and rapidly shifting Federal Reserve interest rates.
The privilege is under severe, undeniable pressure from all sides.
We are basically witnessing an unstoppable force meeting an immovable object. On one side, you have US exceptionalism. The dollar still possesses unmatched global financial infrastructure, incredibly deep and liquid capital markets, a massive boom in AI-driven technological growth, and ultimate control of the SWIFT messaging system. It's really tough to bet against all of that. But on the other side, you have global fragmentation, the rapid rise of the BRICS coalition, record-breaking central bank gold hoarding, and a desperate, highly organized push for local currency trade to ensure long-term economic sovereignty. The lines are officially drawn.
Which brings us to our final, lingering thought. For 80 years, this piece of paper has been the ultimate weapon and the undisputed operating system of global finance. But as the tectonic plates of monetary power shift beneath our feet, as nations hoard gold and build new financial plumbing in the shadows, you have to ask yourself a very serious question. If the US dollar loses its absolute monopoly, who writes the code for the global operating system next? Thanks for joining me on this explainer. Keep your eyes on the data, and I'll see you next time.